Vegas, baby. Let's talk about the taxation of gambling winnings and gambling losses on this episode of the Hawaii Retirement Show. All right, welcome everyone. Thanks for tuning in to this episode of the Hawaii Retirement Show. On today's episode, we're going to talk about Vegas, baby. I just got back from Vegas, took a little trip with my wife and her mom, auntie and uncle, and met my brother and father out there. Had a good time. Made a lot of deposits, not a lot of withdrawals. The casinos are still undefeated as far as I go. But today I want to talk about the reporting of gambling winnings and losses for taxation purposes. So a taxpayer has to report gambling winnings as income. You have to, even if it's technically $25, $50. That is supposed to be reported as income on your tax return for the year in which you won that money. Additionally, anything other than cash winnings, so let's say you win a truck, you win a house, you win a piece of art, whatever it might be, the fair market value of that item is also supposed to be included on your taxes for that year and reported as income. So, I mean, I'm sure the IRS isn't going to go chasing around everybody for winning $5 here and there. But technically, by the rule of the law, any gambling winnings should be reported as income. Now, these rules kind of apply to casual gamblers, right? I know there's probably a small cohort out there of professional gamblers. I don't know, maybe that's a professional Texas Hold'em poker player, or if there's professional sports bettors. I don't know them, but I'm sure they're out there, and I think the taxation of what they're doing would be different than what we're talking about here. But for the casual gambler who takes the trip to Vegas, all those winnings are taxed as income. So if you earn or if you win a certain amount, the casino will likely issue you a Form W-2G. And I'll go down the list here of when they're going to issue this Form W-2G for your winnings. And it is if you win $1,200, $1,200 or more in gambling winnings from bingo or slot machines, $1,500 or more in winnings reduced by the wager from Keno, more than $5,000 in winnings reduced by the wager or the buy-in from a poker tournament, $5,000 for a poker tournament. And then outside of those games that I kind of mentioned, the bingo, slot machines, poker, and all that, if you win $600 or more in gambling winnings, and the payout is at least 300 times the amount of the wager, 600 or more in gambling winnings, and the payout is at least 300 times the amount of the wager. So I guess if you win more than $600 in gambling winnings, but the payout wasn't more than 300 times of your wager, by the way I'm reading this, then it wouldn't apply as far as them needing to issue you a W-2G. And then the last one, I'm reading this off of what the IRS has on their website, is any other gambling winnings subject to federal income tax withholding. So what they mean by that is if you win an even higher amount, then there's going to be a federal income tax withholding on your regular gambling winnings. So if you win, let's just take a scenario. If you win $1,200 or more on a slot machine, you're going to get issued a W-2G. But you're not necessarily going to have any taxes withheld on those winnings. Well, you can choose to, I believe, but it's not required. However, at a certain threshold, and let's see here, if the earnings the winnings minus the wager is $5,000 or more. So if you bet $100 and you win $5,100, then there's going to be 24% withheld for federal income taxes. So you can get issued a W-2G, which is something that you'll give to your tax preparer, your tax advisor, or whatever it might be. If you do your taxes, you can use that yourself. And I outlined the numbers, the thresholds to which those are issued. But if you win more than $5,000 minus your wager, so subtract your wager, $5,000 more, then you're also going to have 24% withheld for federal income taxes. Now, for those who gamble a lot, who put in a lot of money, then you can deduct some gambling losses. So the gambling losses can be deducted as an itemized deduction on Schedule A up to the extent of your gambling winnings. So let's dissect that, right? It can be an itemized deduction. So if you're using the standard deduction and not itemizing, then this doesn't apply. And it's only to the extent of your gambling winnings. So if you won $5,000 and you lost $10,000, you can only deduct $5,000 because that's the extent of your gambling winnings. So in other words, you can't report a net loss from gambling. You can't go to Vegas and take an itemized deduction for $10,000 because you didn't win anything and you lost $10,000. That's not how it works. You don't get a loss, but you can deduct your losses up to the extent of your gambling winnings. Now, if you're going to do this, and even if you're not going to do this, whenever you're doing income or deductions or anything with your tax returns, you are required to keep some sort of record or receipt or ticket or statement or something that can show the amount of both the winnings and the losses. Right? So that's why it's kind of good when you get these, we stayed at the Cal there and they get the Boyd, player's card there and you put it in the machine. Because I think that's should be keeping track of your winnings and your losses and times at the machine. Now, you just do the best you can with maintaining, the best records that you can keep on this. And this should go without saying, but it doesn't carry over year to year. You can't say, over the past 3 years I've lost this much, but it's this year that I won the money. It's on a yearly basis. So you kind of think of it as you kind of settle for the year, your winnings versus your losses. So one last thing to touch on is this also applies to prizes and awards outside of like the Vegas casino type of scenario here. For instance, if you're like a photographer and you win some prize for your work for $100, technically you're supposed to report that as federal income. If you refuse to accept the prize, then it won't be included in income. But likewise, if you're a photography person and you win a prize of an item that's not cash prize, technically that should be included in income, right? It doesn't have to be cash. Any winnings, prizes, awards, or in the casino setting must be included in income there. All right, so I think that about wraps it up here for the Vegas Baby episode. Wish everyone well. We had one party in our crew who won a little bit of money, but the rest of us made some deposits. The casinos are still undefeated, but it was a good time, and I always enjoy going over there just to sightsee, eat, and enjoy myself. So, all right, if you have anything you would like us to talk about on the show, email us over at aloha@hawaiiretirementshow.com, and we'll catch everyone on the next one.
The opinions and statements presented on this show are for general information only and are not intended to provide specific advice or recommendations. Never make any investment or financial decisions based on information offered on this show without first consulting your financial, legal, or tax advisor. All economic and performance information mentioned on the show is historical in nature and is not indicative of any future results. All indices mentioned on this show are unmanaged and cannot be invested in directly. All information is believed to be from reliable sources. However, we make no representation as to its completeness or accuracy. Lastly, all opinions expressed by Jason Cutitta and any guests on the show are solely their own opinions and do not reflect the opinions of or are endorsed by ToBA Financial. For Jason Cutitta, investment advisory services are offered through ToBA Financial LLC, a registered investment advisor offering advisory services in the state of Hawaii and in other jurisdictions where exempt from registration.